while this is a good benefit to you, when should you go for hedge accounting? And what are the risks of hedge accounting? What are the issues with hedge accounting? One thing is hedge accounting is operationally intensive in the sense that you have to track a hedge relationship document. You have to track a particular hedge in its rollovers, in its early utilizations. Everything has to be tracked. The documentation has to be clear for every hedge. Then you have to also prove the prospective hedge testing document every hedge. And finally, you have to do retrospective testing in every quarter to prove all your hedges are effective or not. So it's a very operationally cumbersome process, especially if you want to go for hedge accounting of your imports or exports, because of course there are flexibilities. For example, if you are an importer and you're importing regularly, you have a flexibility of hedging each import and tagging the relationship for each import, or you can keep your imports on a pooled basis and manage it at a pool level. So your hedges can be for a pool of cash flows rather than a single cash flow. Those are all there, flexibilities are all there, but still it is cumbersome. So you have to but for loans, for long-term loans, it is definitely not that cumbersome, because loans don't tend to be too many in number, right? Maybe 3-4 loans, right? Or maybe 10 loans. It's not difficult to maintain the relationship documents and so. Now, what are the scenarios in our view that hedge accounting is going to be really beneficial to you, right? Now, long-term forwards is where hedge accounting will be significantly of benefit. Why? Because long-term forwards tend to move in MTM significantly. It is not going to be, it's not like, it's not going to be smooth. When you do a 5-year forward, the mark to market of the forward, just because of the forward premium, can move 2 rupees in one quarter, then 1 rupee minus 1 in another quarter. So the fluctuation can be significant. Similarly, long-term swaps, right? Long-term interest rates like MIFOR rates, right? USD IRS rates, they also fluctuate significantly. And because of those fluctuations, your quarterly P&L might get impacted. So it's good to look at it. And IRS rates, interest rate swap rates. And finally, where you want to hedge long-term, but your actual accounting cycle is short-term. Like, for example, you are a IT exporter, or you are an exporter who have a good visibility of cash flows. Similarly, you are an importer of, let's say, a particular commodity, and you think that there is a visibility for the next 12 months. I know the rough amount of imports I'm going to make. Now, it's very good. It's actually prudent in this kind of market to look at hedging even those long-term import buyings that you're going to do, right? Now, in such a case, but at any point in time, you're going to book only the next 3 months of imports, maybe, and only at any point in time, you have only 3 months inventory. So in such a case, your accounts payable will reflect only the next 3 months of imports and not beyond that. So if you hedge your next 6 months or 1 year import, then you will have a problem in a quarterly P&L because of the forward contract you did. So in such a case, again, hedge accounting will be very useful. So at least, and one more thing is, hedge accounting doesn't mean that you will have to use hedge accounting for every trade. You have a choice. Hedge accounting means that you can choose to put which trade you're going to put in hedge accounting and which trade you're going to keep under normal accounting. It's up to you, right? So a lot of companies have both the books running at the same time. They call it a MTM or fair value accounting book, and then the second is a hedge accounting book. Typically, hedge accounting book has long-term trades, or the highly probable cash flow based trades are put into that particular book. Whereas a MTM book is basically the standard book, which has already crystallized exposures are being hedged. One is hedge effect accounting is intensive in terms of operational problems. What is the other problem with hedge accounting? Other problem with hedge accounting is that it takes away the flexibility of your hedging program. In the sense, with hedge accounting in place, it's very difficult to book a trade, right? Cancel the trade, rebook a trade, be a bit more dynamic, right? So dynamism kind of comes down. Why? Because the day you decided that this is going to be a particular hedge is going to be a hedge, the intent is to keep that hedge till maturity. You can't manage your hedge ratio by unwinding and rebooking, and all those aspects. It becomes a bit difficult. That's why a lot of companies, where they want to optimize and try to generate a bit of a delta in their treasury activities, or try to reduce costs through option structures or forward by dynamically managing the hedge ratio. In those cases, they put those trades in the normal accounting book, fair value accounting book. And long-term strategic hedging. Like for example, you got a long-term contract wherein for the next 2 years your cash flows are known to you roughly, and that contract is of a slightly lesser margin, and you want to make sure that the FX rate you used in the contract is met in your hedging. In such a case, it's better to hedge for long term and keep that contract aside. At least a part of your hedging process, long-term hedging is taken care of. It is taking care of some of those margins for long-term contracts. In such a case, obviously hedge accounting will be used, right? So it's not like it's not all or none. You can choose what to hedge in under hedge accounting and what not to hedge under hedge accounting. It's perfectly fine. But the sort of disadvantage you have in hedge accounting is that you cannot tamper with those hedges too often and hope that hedge accounting will continue. The moment you cut a hedge, cancel a hedge, right? Then you want to reinstate that hedge back, it is no longer a hedge. That relationship is gone. So there are some of these negatives for hedge accounting for those who want to